Hi everybody, Ken Heinz here, HFR President with the HFR 500 October 22 Performance Snapshot. October was another interesting month. It was interesting because we saw a continuation of a lot of the risk-off trends which dominated September and late August performance, but we also saw a key inflection point in the middle of the month where there was two very distinct market cycles, risk-off for the first 2 weeks of the month and risk on for the latter 2 weeks of the month. And the reason this is so significant is that we ended up with a very strong month of hedge fund performance and a strong month of equity market performance. In fact, the Dow Jones Industrial Average actually posted the strongest single month of performance in over 40 years, and that was only in the latter 2 weeks. So it was an exciting time, a real inflection point in terms of the change in sentiment that occurred around the middle of the month, and the hedge funds, the HFR 500, actually gained over 2%. We're going to talk a little bit about the drivers of that performance over the next few slides. We used this slide last month and I updated it to include the October performance here. It's really been a very strong, it's been a historic year for macro strategies in the HFR 500. So here we actually show the gains of 3 different leading areas of macro performance that compared to the performance of equities here represented by the NASDAQ. That really shows in the first 10 months of the year very strong gains in the macro total, in the macro CTA, and the macro commodity areas. This shows it by month, and you can see obviously a lot of negative performance by the NASDAQ composite, not in October, but in most of the other months except for July. You saw pretty sharp declines. We're going to talk more about that in the coming slides as well. While macro gains have really been the story for most of, and the story that's really dominated 2022, in October, it was actually the directional strategies, event-driven and equity hedge, that posted the strongest gains. You can see here in October, the HFR 500 event-driven index gained a little over 4% for the month. That actually tops the gain of the NASDAQ, 3.9%, and nearly 3% gain in equity hedge, 2 7/8%, and overall composite gain 2.1%, 1.4% in the macro, and just a narrow decline in fixed income based relative value strategies. So there's 2 things that I think are important takeaways here. One, that we saw a reversal. Directional strategies have been the lower area of performance throughout the year. We saw the reversal in the second half of the month, and those post strong gains, which I guess is to be expected given the very strong reversal we saw in equities. But I think what's even more impressive is that the macro strategies, which have really been uncorrelated, or probably more importantly, inversely correlated to equity declines for most of 2022, actually posted a gain despite equity markets reversing. And so that's a very impressive alpha that we're seeing in the HFR 500 macro index. We'll talk more about that more. Drilling one level deeper to talk more about October, but going down to the sub-strategy level of performance, we can see a very strong gain in the distressed restructuring index, 9.6%. We'll talk about that in a second. Activist, also an event-driven, 5.3%, and 4.8% in fixed income sovereign. The fundamental value index gained 4.6% and almost 4.6% in the event-driven special situations. So I think when I look at the drivers of sub-strategy performance, distressed we generally think of as very idiosyncratic. It certainly has some beta equity markets, some beta to bond markets, but generally it's more a function of the individual companies that are going through distressed and restructuring. So it's largely idiosyncratic and doesn't have the same beta that you see in things like activists and special situations. Those, as you know, are very high volatile strategies within the event-driven space with the most amount of directional exposure, and you can see that those posted strong gains for the month. And we also have a gain of 4.8% in fixed income sovereign in the sub-strategies. Taking a slightly longer view of time and thinking about October performance within the context of the full year, the year-to-date first 10 months of 2022, we see a continuation of a lot of the trends which have really dominated performance, and that's leading area of performance being macro, nearly 18.5% gain, and fixed income based, the most interest rate sensitive area of the market, relative value, just a narrow decline of 1.07%. So there's a couple of things that I think are impressive about this. One, macro is really firing on all cylinders, meaning that even though you've got a diverse composition of sub-strategies within the macro space, quantitative trend following, commodity focused, currency focused, and trend following CTAs, regardless of the market paradigm which materializes, the strategy has found a way to make money, obviously jumping from inversely correlated gains that we saw where short fixed income, short equities, and long commodities have really dominated throughout the year. Certainly that there was a different set of drivers of performance in October, and the same result was a gain as well. It's impressive that with regard to the relative value index, this is the most interest rate sensitive area of the market, and we all know how much treasury yields have increased and how the yield curve is inverted, with short rates even going up more than long rates. And that being the case, you basically have an unchanged performance. Certainly there's some strategies that have been gained, others have declined. You think about the index overall, decline of 1% with interest rates rising as much as they have. Overall composite narrowed its year-to-date decline to 2.86%, where the two directional strategies with the most amount of equity beta declined 5.2 and 13.5% on a year-to-date basis. Again, both of those, despite being declined, significantly outperforming the performance of equities. Here we show that against the NASDAQ, which at that point was down nearly 30%. Going one level deeper and taking a slightly longer view of time, we have the sub-strategy drivers of performance. We see that they really haven't changed with the October gains. We still have strong leadership from the commodity-oriented, fundamental commodity-oriented strategies, 43.75%, really historic gain for these strategies in the first 10 months of the year. Also, the macro quantitative trend following CTA strategies, 23.75%, extremely strong performance. And again, as I said earlier, what's impressive is that there's been different engines of macro, and there's even been different engines within the systematic diversified, because the drivers of this can be short certain areas and long certain areas, and they can turn over as the market cycles shift. We certainly have seen a great trading environment for these type of strategies to produce the gain, 23.75%. 15.1% in equity hedge energy-based materials. This is particularly impressive because these are not the commodity holding, but they are the equities of funds that are investing in exploration and production and things like this. So these truly are equity strategies, equity long short. And so in an environment where you have the NASDAQ down 30%, you have a gain of over 15% for these for the year. So that's impressive. And if I take that back to the beginning of quarantine, I know I've mentioned this a number of times on these videos as well. That's really the leading area of performance, more than doubling over that time. Macro multi-strategy is really a roll-up of all the different sub-strategies that in the context of a single fund. So 14.1% gain there, and then 11.7% in the relative value volatility, which, as you know, is funds that are similar to CTAs, but they're more option trading, and these are funds that trade volatility as an asset class. Again, 11.7% gain there. We've got a lot of great information on the Investable HFR 500 indices on our website. Please feel free to visit www.hfr.com. When you get there, please check out the Investor Guidebook, which is a lot of great information on how the HFR 500 is really a solution to common benchmarking challenges that institutions face. If you're watching this video, you know we do regular performance updates on YouTube. Please subscribe to the channel and please provide any feedback or anything that would be helpful for us to discuss on future videos. We always love to get the feedback from people on what would be more helpful to see on these videos or other things to discuss. We also have a great video on the Investable HFR 500 on the YouTube channel Please feel free to check that out. If you have questions as well, please send an email. You can email HFRI500@hfr.com. You can send your email to that, or you can email me, Ken Heinz, or any representative that you work with at HFR. Happy to speak with you regarding the Investable HFRI 500. Look forward to speaking with you next month. Thanks.